We found out this morning that third quarter GDP, well, it roared back as businesses reopened following the pandemic-induced shutdown. The U.S. grew at a 33.1% annualized rate after plunging 31.4% in the second quarter. But of course, the resurgence of COVID cases now threatens to undermine those gains. Here to talk about growth prospects going forward, Diane Swonk is chief economist at Grant Thornton, and we welcome CNBC senior economics reporter Steve Leisman. Steve, let me just start with you. Where are the estimates following that big snapback now? And have you seen, I saw them go up maybe a little bit on some trade data, but I'm curious if anyone's starting to revise them lower as the COVID outbreak worsens yet.
No, not yet, Kelly. We're waiting for those estimates to be changed today to see how people put those into their models and spit them back. Mostly you had at least one person we talked to had a lower than expected inventory rebound in the third quarter. So that's something that's going to really drive or could potentially drive growth in the fourth quarter here, which is the inventory rebound. We had a pretty good one up more than 6% or added more than 6% to the growth this quarter, or sorry, in the third quarter, and it could add more. The big question, though, is the consumer. The consumer drove almost all of this. It was a 40% increase in consumer spending. It was something like 80 for durable goods. So what happens with the consumer? His or her wherewithal to spend and the means to spend are really the key right there.
Diane, where are you? So again, we had 30% drop, 30% rebound. Where are you for the quarters following that?
Well, I was at 33%, so this came in as expected for us. But I think it is important to think about, we are a little weaker on the fourth quarter because we are expecting a second wave to put a damper on economic activity. So we're only at 1.5% on the fourth quarter. That is much weaker than we're entering the quarter. You could get 5% gains, but once you start dampening it down with the slowdown in activity in response to the spread of the virus and more limited mitigation efforts, we're not expecting the full lockdowns, but this is what could be a much larger spread of the virus. And what we've seen is the minute places like Wisconsin, where they're having a real surge and overwhelming their healthcare system, we've already seen they are the one state that produces daily initial unemployment claims, and those unemployment claims in that state have begun to pick up despite no efforts to mitigate with lockdowns. So I think that's very important to understand, is what the behavioral aspects are going forward. Also, we were concerned about the decline in state and local government spending that we saw. Most fiscal years started July 1st, and of course we know the shortfall in revenues from sales and income tax from COVID. It did impact state and local government budgets for fiscal year 2021, and that started on July 1st. Right. And that's the headwind that we face as we go into the fourth quarter in 2021.
And Steve, as Diane points out, we're still 3.5% below kind of the peak that we were before the pandemic set in, which is pretty big. I mean, that's pretty much as bad as it was during the depths of the great financial crisis. Yeah. So I would expect if this doesn't get better, if the case count doesn't calm down here soon, that, I mean, this now would obviously seem to put a lot more pressure on Congress to step up and do something like the CARES Act, all over again.
Yeah, I think that's true. I think the key this time is to do a little bit of a better job than they did the first time around of getting aid where it's needed. Again, that's more small businesses, some of the minority communities that have been hardest hit. For example, when we look at the PPP spending in the small business, it wasn't necessarily correlated with where there were the biggest coronavirus outbreaks. And Kelly, I didn't answer your question as well as I might have. I forgot to tell you that we had a 6%, sorry, a 6%, pardon me, a 7% average forecast for the fourth quarter. So Diane is light, but there are a lot of good reasons, because we have people down near zero and people in double digits for the fourth quarter. There's an unusual amount of variability. And the reason is it gets right at the issues you're talking about with Diane, how much coronavirus is spreading, how we respond economically, and I guess from a public health standpoint with how much there is in the way of shutdowns. And again, the critical question you just asked me, which is how much there is in the way of fiscal stimulus.
And finally, Diane, on the issue of the Fed, which we haven't really brought up because I think everybody knows that fiscal is probably a better way to approach this. And the Fed's done a lot. I mean, M2 is way up. It's one of the big reasons why people can point to liquidity in the markets and ultimately even in consumer bank accounts and say, you know, it is having a real effect. Is that, though, something where they need to kind of press the pedal even harder to the metal or not?
I think they're going to have to. I think, unfortunately, I'm not as optimistic that we'll get a lame duck Senate to move on fiscal stimulus. And what worries me is that we might not get anything till whoever the next president is sworn in until then, and get fiscal stimulus in February. That's an eternity for those people who have already run out of supplements to their unemployment insurance and are seeing food insecurity. So the Federal Reserve is in a tough spot. You heard Rick mention that rates are creeping up again instead of going down as the economy, as we go into this next round of COVID. That does put more pressure on the Fed to think about their balance sheet. They've already committed to being more aggressive for a longer period in time in terms of buying Treasury bonds. That's an area where they still could move more aggressively. There's also some debate on whether or not they could buy some more time for state and local governments by extending the length of time they buy municipal bonds. And that's much more controversial, but I think this is a Federal Reserve that's looking at every option out there.
Absolutely.
Shepard Smith here. Thanks for watching CNBC on YouTube.